Bitcoin is a decentralized currency, and there's lots of people who are wondering, how will it perform in a time where we may go into a recession? Well, in order to understand how it could perform, first we need to understand how it has performed. Bitcoin, over the last 13 years, has served as a non-correlated asset. It allowed for investors to go ahead and buy it, put it into their portfolio, and provide a positive impact on their financial returns. As they pursued a risk-mitigated asymmetric return, investors were very happy with having that exposure to Bitcoin. But now it seems that we actually have two different types of Bitcoin holders. First is the Wall Street institution world. Bitcoin is the most risky asset that they actually own. And then there's the everyday average citizen. Bitcoin is their reserve asset. They continue to just dollar cost average into Bitcoin, regardless of what happens in the world. Now, the reason why this is important is because if we go into a recession, ultimately, the people who treat Bitcoin as a risk asset, they're likely to sell it along with every other risk asset in their portfolio. But the people that treat Bitcoin as a reserve asset, they're likely to continue to dollar cost average and simply hold on to what they think is the most pristine asset in their portfolio. So if we go ahead and we take a look, has Bitcoin been correlated to risk assets or not? Well, there's brand new data coming out this morning that you should pay attention to. We've got this tweet here from Lawrence McDonald, where he says that since 2020, Bitcoin's been tied at the hip with the NASDAQ 100 index. The 40-day correlation just reached a brand new record high. Bloomberg reporting that increases in this correlation further erode the argument that Bitcoin works well as a diversifier, one that's been held up by proponents as key to its appeal. And if we go ahead and we take a look, yes, Bitcoin and the NASDAQ reaching all-time highs. But if you look back there, the green and red going up and down in correlation, it's because Bitcoin was a non-correlated asset for a long time. Maybe that's changing. Maybe it's not. If we then go ahead and we take a look, you can look at somebody like Arthur Hayes, the founder of BitMEX, in which he states, there are many crypto market pundits who believe the worst is over. I believe they ignore the inconvenient truth that crypto prices are currently an indicator for the S&P 500 and NASDAQ 100, and do not trade on the fundamentals of being peer-to-peer, decentralized, censorship-resistant digital networks designed for the transfer of money. Now, Arthur is looking at Bitcoin as an investment asset. He's saying, what are investors going to do? Do they treat this like their growth stocks, like their tech stocks, or do they actually look at it as a non-correlated asset today? The influx of new investor types since 2020 has changed a lot of what's going on in the Bitcoin market. What happens from here is anyone's guess. But one of the key takeaways is that you have to have an open mind. You have to constantly reevaluate your perspective. Things change quickly in Bitcoin and crypto industry. And this is just one more data point that suggests that the holder base changing may actually be changing the way that the asset performs in certain situations. As the Fed continues to increase their interest rates and look to try to get inflation under control, my guess is that we're increasing the probability of a recession. If people fear a recession coming, they're not going to wait for it to occur before they move their money. And that's probably why we're seeing a good amount of sell pressure on an asset like Bitcoin, which, based on the Wall Street institutional world, Bitcoin is their risk asset, and they're treating it just like that as those recession fears grow. Hey you, did you like this video? Great, we make 5 of them a day and post them here on this channel. Make sure you're subscribed, like the video, and see you next time.